thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you're new to my channel or my videos, we could create videos on mortgage rates on a daily basis. So that way, if you're in the market looking for refinance or purchase, you're most likely looking to follow where rates are moving. So we're here to help you guys, guide you guys as to where they're trending and what basically impacts them on a daily basis, whether it could be something from the economic calendar, could be something from the headline news, something maybe market changed sentiments. So there's could be a lot of factors in there, and it could get quite confusing if you're on the outside. So we're here to help you understand what's going on with the rates, and so that way, when you guys are looking to lock in, we can hopefully give you the right information to help you make a better decision for yourself or educate decision for yourself. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys out, whether answer questions for mortgage rates, or if it's about if you're looking at questions about mortgage programs available out there or whatnot. Please feel free to answer. We're here to answer any questions. We'd love to earn your business. So if you're looking to refinance, please let us know. We'd love to be able to talk to you, run numbers for you guys. If you guys are looking to get purchase, want to buy your first home, or if you're an investor, we're here to help as well. We can get you pre-approved and help finance that next property. Please give us a shout. So without further ado, we'll start off with the economic calendar. First on the agenda will be the Case-Shiller Home Price Index. We've got two home price indexes. The first one will be the Case-Shiller one, and the FHFA one. The Case-Shiller one will show the top 20 markets in the U.S. So it's month over month. For the month of September, we had back in August, it went up 1.2%. Forecast was calling for the same trend at 1.2%, and it came in only at 1%. Now it's year over year, went from 19.7, was revised in August downward to 19.6. Forecast was calling for 19.3, and it came in at 19.1. So we're still getting quite a bit of activity out there. It's just that it decelerated a little bit. Not like a slowdown, but it just decelerated. Is what that would be the best word to describe that. Now, FHFA, this is does the conforming loan limit properties around the U.S., and its month over month went from 1% in August to 0.9%, so a slight deceleration again. And again, its year over year went from 18.5 to 17.7. So both indexes are showing deceleration. Now, the FHFA is, as I mentioned, conforming. They did announced their new conforming loan limits today. So it went up like 547 and change. Now it's going up to 647,200. So this will be the new conforming loan limit effective in 2022. So a lot of lenders will be getting started with this, now. And of course, we'll probably fund it in January, so that way it'll be effective at that time. So if you're in the market, this will be the new conforming limit for yourself. And then high balance, of course, will be higher than that, but this is the regular conforming limit. So let's move on the economic calendar. We have the Chicago PMI for the month of November, and what that does is it tracks the business activity around the Chicago region. Anything above 50 is expansion, so it had a 68.4 back in October. Forecast is kind of 67 for November, and it dipped much lower than that, down to 61.8. So still a decent number. However, it did have a pretty substantial drop there from 1 month to the next month. We got consumer confidence in November. So we got a revision back in October from 113.8 down to 111.6. Forecast was calling for 111 for the month of November, and it came in lower at 109.5. So people weren't feeling as rosy, as it seems like, or confident about things heading into the holiday season. So it'll be interesting to see if that changes in December. Now, we also had the Powell and Yellen congressional testimony. There was some news in there. We'll touch on that as we go over the UMBS, or we'll touch on that here in a second. But we'll just look at the mortgage-backed securities. So as you can see here, we started here right at the 50-day moving average at the top part. We actually rose at one point above that. However, since then, it came downwards to basically the 25-day moving average, and even where it's down further and has pulled back a little bit. Now, what happened in here? Now, what led to this higher starting point was actually a comment by the Moderna CEO saying that he doesn't think the existing vaccines uh, will do much against this new variant of the Omicron. So that created a lot of panic in the markets as a result. Uh, Also concerns about lockdowns. We already saw that there's been some travel bans against South Africa, and so again, we already think that it probably could be already out there in other countries, but hasn't been picked up yet. But again, as we get the information, probably it's too late, as more people who have it probably already passed on to other countries. But in any case. Um, and then with the testimony, we got the testimony of Janet Yellen and Powell. This kind of freaked out the markets. This hurt us, the MBS especially, which is mortgage-backed securities. Um, Basically, he was telling the Senate Banking Committee that they were thinking of tapering, wrapping up the tapering much sooner, so that could be uh, to finish it up quicker. So that means there's less liquidity, less stimulus out there in the markets. Even though there's a potential crisis or a pandemic coming ahead with this new Omicron. And then also basically said it's time to remove the transitory inflationary data, and that they really want to go after this inflation, and that he does feel it's going to come down a bit over the next year, but again, we do see some areas in there with the supply chains that we could see the higher inflation as uptick for the time being. Omicron that could create higher inflation as well. So when all those comments were made, MBS kind of dropped lower. So what happens is that around here, when it first came out with this news, people on the East Coast were getting a little bit better rates. After all that news came out, by the time we get here to the West Coast, we're down here, and we're basically at the same pricing as we saw yesterday. East Coast are probably getting price changes for the worse, so they're probably getting a change in their pricing as a result of that, for the worse on that as well. If you look at yields, we are way down here, even touching out this new technical down that one. Right now we're down at 1.44. Even as you can see here, we got the long wicks here, a lot of uncertainty in the markets, and a lot of that has to do with that new variant, as we talked about with the Omicron. And now, of course, we got Powell on board talking about wrapping up the tapering much quicker than I think investors were expecting. So that's going to have a general effect on it as well. Now let's take a look at the conforming loan limit national average on rates. We got 30-year fixed at 3.21, and we got the 15-year at 2.6. Now these are all got built-in points already built into it, and these are just the national average that's out there at the point. So, and the things that go into a rate is that there is a lot of variables that go into it. There's a matter of the type of property it is, of a single-family condo, townhouse, multi-unit, to your FICO scores, to the amounts of down payment or equity that are in the property, to occupancy, if you're an investor or if you're a primary residence, secondary home, etc. There's a lot of different variables that go into it. So this is why that when we talk to people, that one rate does not fit all people. That there's a lot of different factors that go into these rates, and but it might serve you as a purpose as to give an idea as to what you can expect. All right, folks, if you guys got questions, please feel free to reach out. We're here to assist you guys in any capacities. If you guys like these videos, we'd greatly appreciate if you guys can smash that like button and follow. Helps our channel out and helps us get promoted. We greatly appreciate you guys, and hope you guys have a wonderful rest of your day. Thanks so much for watching, and we'll see you guys in tomorrow's video. Bye-bye.